Compare home financing based on Ijara with financing based on Musharakah Mutanaqqisa. While both are permissible, which is the fairer and the more appropriate of the two? I guess this is also, we'd have to consider Ijara as well as the Murabaha. There's also a Murabaha structure, I think, available. Sheikh Yusuf, would you like to start us off with that one?
Like I mentioned, there are any number of ways to finance goods and services in a compliant manner. The Sharia has been revealed as a mercy to our community. But the principle of justice is at the core of Sharia transaction. The Sharia wants to be sure that the rights of both parties are guaranteed, or of all contracting parties are guaranteed. In comparing Musharakah with Ijara, we'll look at the rights of the financier paying the full price of the property in cash, making the initial purchase, and the rights of the client, the home buyer, who pays in installments of one nature or another in order for the property to eventually become her or his. So in Ijara, muntahiya bit-tamlik, which is certainly permissible. In Ijara, which ends up with purchase. In a financial sense, it seems unfair for the client as he pays installments without owning anything against those installments. I mean, consider that. In both cases, case of Ijara and in the case of Musharakah, the client makes payments over a period of time. The difference is that in the Ijara, those payments do not lead to ownership immediately, whereas in the Musharakah, muntahiya bint mutanaqisa, the payments lead month by month to a greater proportion of ownership. And U.S. Bank, as I explained earlier, will detail down to the cent, down to the penny, exactly how much you, the homeowner, actually own month after month. That's a fundamental difference. Again, both are legitimate means of finance, but when viewed from the perspective of the homeowner, there are a number of advantages to the diminishing Musharakah product. I believe also, although I'm not sure whether there's a recourse clause, you can tell us, Hussam, in an Ijara contract or not, whether they build those in or not, I'm not sure. It could be possible, but whether that's the case here in the U.S., I'm not sure.
Well, I will tell you this. From a recourse perspective, there are states that prohibit recourse in the United States, and then there are states who allow recourse. In the states that recourse is allowed, almost all mortgage lenders go after the consumer in the case of default. And if they didn't recoup what they lent that consumer, what they put out, they will go after that person's personal assets, potential savings accounts. They can garner wages, whatever it may be. There's no end to it until they recoup all of the funds that were lent. Because guidance does not lend money in these transactions, we have what's called a non-recourse clause across the entire nation. And so we don't pursue a customer who defaults if we are owed on our portion of the property. And let's assume the property sells. This is in cases where the property has to be sold through a dissolution of the agreement, has to be sold on the marketplace. And if it's sold for less than it was originally purchased, that's when recourse comes into place, where lenders can come after you. In our case, once that property is sold, in the case of default and such, there's really nothing tying us together any longer. The property was really the glue between us. The reason why we were co-owners is because of the property. There was no money lent out and such. So once it's liquidated, there's no recourse to go after anything that's outstanding. That's a major difference, and that I think a lot of times does take the cake when it comes to folks who are not even Muslim, who look at our structure and say, now that's fair. During the crisis of 2008, 2009, mortgage crisis, there were articles all over major press in the U.S. where home buyers turned in their keys to their banks and said, I'm underwater. I'm not able to make my payments any longer, but I also cannot sell the house for a gain to be able to repay you. In fact, it will sell for less and I will still owe you money. So here are the keys. Well, many banks issued deficiency judgments against those buyers, even though those buyers were now homeless. Some of them even left the state to restart their careers and such. And they pursued them through this deficiency judgment, the banks did, for the remainder plus interest accruing on the late fees. And this pursuit took years. So you could have been starting your new life and you still had this deficiency judgment against you to repay the loan you borrowed because there wasn't enough from the sale of the property and the interest accruing on it over time. This hurt the economy even more over the course of the recovery, and it hurt many good people who didn't, this wasn't their fault. So this is a major difference in the structure that we constantly talk about being the Musharakah structure.